Welcome to Spidell's California Minute. I'm your host, Catherine Zidane. This week, we're covering some things to keep in mind about making the June 17th pass-through entity elective tax prepayment. We'll be covering this topic at Spidell's 2024-2025 federal and California tax update, along with an update on AB5 and worker classification after a recent court case, the tax implications of California's new program for first-time homebuyers, a refresher on the pre-TCJA rules because many provisions expire at the end of 2025, and more. To see a list of topics and get registered for a live seminar or webinar session, go to caltax.com and click Webinars. June 17th, 2024 is the due date for the 2024 pass-through entity elective tax prepayment. The law currently in effect requires taxpayers to make a prepayment toward their 2024 pass-through entity tax in order to qualify to make the election on the entity's 2024 tax return. The payment is equal to the greater of $1,000 or 50% of the tax due for the prior year if the taxpayer elects to pay the tax on the prior year return. If the entity did not make the election for the 2023 tax year, then only $1,000 is due for 2024. This is true even if the entity had made the election for 2022. The 50% of prior year tax requirement is based on the pass-through entity tax amount that's due for the prior tax year, not the amount paid. And there are no exceptions for slightly underpaying. If a taxpayer underestimates the liability for a 2023 return that is still on extension, or later amends a 2023 return to increase the liability, the 50% threshold will be based on the amount that is ultimately reported on the final 2023 return. If a taxpayer does not meet that threshold, then the entity is ineligible to make the election for 2024. This is why we strongly recommend that taxpayers add a cushion to the original prepayment amount, so should the entity discover that it underestimated or underpaid the prior year's tax, they will not automatically be ineligible to make the election for the current year. Remember that a taxpayer that makes the prepayment is not bound to make the election when it timely files its return, including extensions. If the taxpayer makes a prepayment on June 17th and either chooses not to make the election when it files its 2024 return, or finds that it's ineligible to make the election, the prepayment can be applied to any of the entity's other outstanding tax liabilities at the time it files its return. For example, the S Corporation 1.5% net income tax or the LLC gross receipts fee. Any remaining amount will be refunded to the entity after the entity's return is processed by the FTB. This can take up to 8 months after filing. If the entity was formed after June 17, 2024, or changed its entity type, for example, from a single-member LLC to a multi-member LLC, and the change is effective after June 17, 2024, the entity is not required to make a prepayment for the 2024 tax year if its 2024 short tax year does not include June 17th. The prepayment is required to be made via one of the following methods: by check along with the 2024 Form 3893 pass-through elective tax payment voucher, via web pay, and make sure the correct tax type and tax year are chosen, because the entity will be ineligible to make the election if the owner mistakenly checks the individual estimated tax payment option, or the payment can be made by electronic funds withdrawal using tax preparation software. If you missed our live webinar on the pass-through entity tax, you can register for the on-demand version and see when making a 2024 pass-through entity tax election will benefit your client, who can and who can't make the election to pay the tax, what happens if the tax is overpaid or underpaid, and more. For details, go to caltax.com and click Webinars. That's all for this week. Join us next time for another episode of Spidell's California Minute.